Okay, Ji. Here we are live again with a new topic. And this time, पिछली दफा जब हमने पिछला टॉपिक किया था तो um, I was the one sort of interviewing, if I may not interviewing, but just asking questions of Faisal. But this time around, I guess it'll be both of us talking about the retail banking business. But since I've been in this business for a little while, so I'm sure Faisal will be asking me a lot of questions. But we'd like to keep the discussion rather free flowing. The topic today obviously is retail banking, and we are going to talk about retail banking. Where does it stand? Where did it start from? And thereon, where is it going to go? Where do we see it going in the future? So Faisal, I just wanted to give a few points, and then over to you. आपके कुछ सवालात हैं इसके बारे में आप पूछें तो मैं इनका जवाब देता जाऊँ.
Okay. Ji, a warm welcome and assalamu alaikum to all the audience that has taken the time to attend this second webinar of GPI, Green Peak International. And as I think most of you know, that Green Peak International is a management consultancy company which is headed by Salman Sarwar. And I think although Salman does not need any introduction, he has been on the banking scene for a very long time, for about a quarter of a century. I hope that does not make him feel too old. But he's been at the forefront of retail banking particularly. And just a very, very quick introduction about him. As I said, he's got about 25 plus years of experience in retail banking. He has been a lifelong consumer banker. He has worked in different top-notch banks like Citibank, ABN AMRO Bank, RPS, then NIB Bank. He started out his career with Citibank, and then he moved on to ABN AMRO Bank sometime in the early 90s. And he has been a group head of consumer banking, not only in Pakistan, but also in Indonesia, where he worked with ABN AMRO Bank for some time. And he is also a board member of Mobilink Microfinance Bank, right? And he has also been a member of the BOD of Al Mizan Investments. And of course, it's not only banking to which he is confined. He is an avid, a very passionate, sportsman as well. And he was on the, I think if I can use the right terms, Salman, please correct me if I'm wrong. You were in the PCB board as well. Pakistan Cricket Board, and you added a lot of value to the PCB's objectives. And I think lately you have also been involved in the promotion of hockey as a sports in Pakistan. So he's a man of many diverse interests and talents. So let's take advantage of his presence here and ask him all we wanted to know about retail banking. So most welcome, Salman.
Thank you, Faisal. Thank you.
Okay.
Thank you for your generous introduction. And what can I say? I'm flattered and floored.
Okay, so Salman, first I'm going to ask you a very fundamental question. A very fundamental question is, what is retail banking? Some people think that it is only consumer banking, whereas there are others who include business banking in it as well. So it can mean different things to different people, even to the customers, and to the different banks. The way they have been differently structured vis-a-vis retail banking. So, what, in your opinion, are the core constituents of retail banking? How do you see it?
Gee, Faisal. So, very rightly said that retail banking, various banks look at retail banking and have structured retail banking internally in different ways. Some think of retail banking as consumer banking, and when they talk about consumer banking, they mean all sorts of consumer finance products. Some think of retail banking as including what they consider branch banking, which means deposit products and other sort of wealth products and insurance products, etc. So people have made banks have made different permutations and configurations of this. However, uh, I generally like to propose retail banking from a segment or a segmented perspective. Which really means, as far as I'm concerned, is that retail banking is all products and services provided by a bank to, number one, an individual. So the individual, all sorts of individuals
Right.
throughout various socioeconomic cadres, and at the same time, because it comes very close to um, businesses, not obviously mid-sized businesses or what we call commercial businesses from the inside, looking at it from inside the bank, but small businesses. So I would generally club um, retail bank as products and services given to all individuals and small businesses. And these products can be provided through various distribution channels. These channels can be branches, they can be call centers, outbound call centers. They can be serviced through branches, through digital, now digital applications, through other alternative delivery channels such as call centers and ATMs and all that. Um, so it's basically segment focused. I mean, that's how I look at retail banking. And when I talk to banks or look at banking business, retail banking businesses, I tend to take a view of all products and services sold to individuals and small businesses, and all services provided to them related to those products. I think that's the reason you find different permutations is because um, I think at times, the way the banking industry has developed historically, we've looked at things inside out rather than outside in. So when we look at things inside out, we think about, okay, what products are we going to launch? Okay, these are all lending products. So therefore, this is consumer lending. Therefore, it should be called consumer banking. And then when we look at branches, because historically we've used branches to collect
Mm.
deposits from customers, so therefore branch banking is all about collection of deposits. But if you look at it from a customer's perspective, a customer wants to come to the branch and be provided products and services that they need, ideally, and be provided a post sales service also from those branches or other touch points of the bank.
Yeah,
So
good. I mean,
that's how
thanks
I
a
look.
lot. I think for clarifying this concept. Uh, but what have you actually seen changing over the years? I mean, you have seen it in different banks, you have seen it in different countries. How has consumer banking evolved in Pakistan? What are the differences that you see between then and now? And do you think that those differences have added value for the customers, for the market, for the country as a whole, or not?
Sure. So if you look at it, let's go back to the early 90s, 1991. Even though I think before that also, individuals were being provided services by banks. Like, we remember that ad of, I think, Habib Bank ka tha, Mera bhi to hai,
Right,
wala ad, so, but if we go back there and we look at early 90s, Citibank came in as a foreign bank and
right,
started providing all sorts of products and services. So
right,
credit card, auto loans, mortgage loans, these sorts of products and services were provided. Funds for people to invest in. Basically, a focus. They branded an offer to individuals and said, "Hey, listen, individual customers, we will give you personalized service, and we will take care of your needs, through our branches and through our delivery channels, through our relationship managers. We will offer you an array of products." So that was probably the beginning of what we see evolve today.
right.
This was, then followed by the Standard Chartered, Grinleys, then, of the worlds, um, and then we saw, ABN AMRO come in a few years later, and then slowly and gradually we saw that the local banks also started to, started to move in that direction because they saw the opportunity. So surely, um, the foreign banks coming in with this sort of offering and with this sort of approach
Hmm.
added a lot of value, in my view, to the banking landscape as a whole, because uh, this approach was not taken before that. Nobody launched a credit card before that. Um, Nobody actually went out and said, "We'll give you auto loans, and we'll give you mortgage loans, and this is what we have to offer." And then, you had, the likes of um, City Gold offering, so, a preferred banking offer to the industry. And then, you had the ABN AMRO. I remember when we joined, we came up with another offer that said, "Listen, we will give you quality service. Where this is, we will give you service in certain timelines. Come to our branch, and your check will cash in 3 minutes, and you'll get account will open in a day." And all those sorts of things started to happen. So that was definitely a value addition in terms of products, and then in terms of also um, an awareness that individuals were a market that needed to be tapped. They could be offered all these products, and obviously, which is good for them, good for the bank, good for the economy as well, because people want, buying uh, houses, or buying autos, um, consumer-led products and services, obviously ignites the economy and gets the demand side going. So good things, and then complemented by service quality. The awareness that customers needed to have certain turnaround times. They couldn't wait for hours and hours. So the awareness of that, and awareness that the customer needed to be served. It didn't have to be a blue chip company for the bank to run around and provide those sorts of services. If you were an individual customer, the banks were then being sensitized that service needed to be provided, paying attention to their needs, providing them the right sort of solutions, but also providing them in a timely and hassle-free manner. I think that's the awareness that the industry started. So yeah, these are the sort of things that started to happen with the introduction of a branded consumer banking, retail banking offer. Um, in initially when we launched, I remember that there was a lot of push. Foreign currency was something that banks were allowed to do, and banks started to go in that direction and bring in foreign currency deposit. And so that was the focus back in the early 90s. The funding side of banks was taken care of by foreign currency deposits being brought in, and then came the freeze after that, and the banks kind of moved towards local currency, and that was a switch in direction, if I may. And it took a little bit of time for banks to adjust to local currency funding. Um, and then other banks started to come in with their products and services. So एक तो वो era था foreign currency and with the foreign banks coming in, introducing all these products and services. And then gradually we come to probably the earlier part of 2000s,
Right.
to retail banking, and getting into the area with a much larger network.
I think, Salman, we have lost you. Can you hear me, Salman? Actually, your voice and your picture both have frozen.
Sorry, Faisal.
Sorry, we got disconnected. So just to
We had
resume,
some connection issues.
yeah. So just to resume from where we got disconnected, you were talking about the early, I think, 2000s uh,
Correct.
with regard to consumer banking in
So
Pakistan.
yes, so when the local banks then started to come in, and we saw an expansion in the products and services being offered. Um, but I think with all that, there was, um, whilst there was growth in business. Um, I think there are the standards of the service that needed to be provided, and in my view, even the quality of business that was being done and is being done uh, uh, is such that I would today say, if somebody was to ask me, how is, with all this growth and all this awareness and all of these things or good things happening, I would still say that the opportunity for a retail bank in Pakistan is in multiples. So opportunity for growth is in multiples. I would say primarily because of various reasons. Um, and usme, as you know, Faisal, we worked together in ABN AMRO. Um, when I start to look at in the last 10 years, 10, 11 years, we've been from the platform of GPI, we've been working on retail banking businesses of various banks. And we've also provided, an approach to more than 8 to 10,000 branch managers on how to look at their business and how to grow their business. What we've seen in all of this, uh, Faisal, is that um, banks have huge portfolios
Yeah.
of customers, um, uh, but the portfolio itself is not really um, optimized.
Mm.
Uh, and there are concentration risks in the portfolio. That's one. So if you look at um, deposit side, you'll see concentration risks. Not many people, not many of the customers provide much of the deposit. That's one. The other thing is that when you look at product penetration, uh, you know, banks will have maybe 15 to 18 products that they can offer to customers. But when you look at product penetration across across the customer portfolio, you will find that product penetration is actually very, very low. Um, and with that, when you talk to the customers on the other side, so get the real feel of what customers are saying,
Mm.
and you ask them, do you really have a relationship with the bank? Does the bank really know what your needs are, and do they offer solutions to you? And we find that that's where the biggest gap has sort of evolved. And the gap is that the customers say, well, when the banks want to sell something, or when I take my money out of my bank account,
Mm.
then I get a call from my branch or from my relationship managers.
Mm.
um, but when I'm actually looking for a product that I need, I really don't know who to go to. I have a bank. In fact, I have maybe two, three, four banks that I have either an account with or a credit card with, but I don't know where to go to actually. I don't know where the best offer is. I don't really have a relationship. So, in this entire growth momentum, what we've forgotten about, I think, is building an organization that serves the customer. And in doing that, I think we are grossly under optimizing and underperforming as a business in terms of business volumes, in terms of profitability, in terms of revenue as well. So we're grossly underperforming. And therefore, I think, in my view, and we've talked about this as well, Faisal, that I think retail banking needs to think hard. Retail banking business managers, CEOs need to think hard about what they're doing.
Yeah. Well, Salman, I think you gave a very comprehensive account. You've encapsulated
Mhm.
some of the stages of retail banking in Pakistan very, very comprehensively, and that triggers the memories of the time we had spent together in ABN AMRO Bank. It used to be a very happening bank at that point of time, and I think banking in general in Pakistan was also flourishing. I know that new banks were being set up. There were foreign banks which were coming in and setting up their shops. For example, I remember that Barclays Bank, back in I think it was probably mid 2000s or early 2000, I think, back
Anji.
in 2005 or 6, I believe, when it had set up its
Hmm.
branches in Pakistan. So a lot was happening, and absolutely, I mean, as you said, that the products and services they were being innovatively, I mean, offered. And yes, absolutely, as you've said. as you've rightly said, that the foreign banks actually played a very active, rather a proactive role in taking retail banking to that stage of modernity as well as progressiveness. So, but what was happening was that local banks, as you have also alluded to, they were not very active in this arena. So why was that? I mean, foreign banks, did they sort of did they awaken the sleeping giants of that time, the local banks? I mean, what was missing? And now we have a situation where, of course, I would say that the foreign banks, they have lost their footprint in Pakistan, and retail banking, by and large, is being practiced by the local banks. Although, I mean, obviously there are players like Standard Chartered Bank, and I would even include Faisal Bank also as the foreign bank. So there are a few foreign banks who are still in the game, but by and large, it is the local banks. So what was it that was happening at that time, and how have the local banks, I mean, basically bridged their gaps so that they have been enabled to grow, and also to grow in a very I would say progressive manner.
Yes, if you look at what the local banks have done, and especially the large local banks, um, they have the shortcoming of foreign banks was network. So at that point in time, branch network, and still is, I think, branch network played a very important part. Today, uh, you have now the big fives with thousands of branches, and you have branch presence, uh, and those products and services at least being made available to customers through a large network of branches. So I think one of the uh, benefits of local banks stepping in is the large network that obviously being, and then obviously you have these banks with with capital and a view to the local business. So when they go into digital solutions, then obviously these digital solutions are made available to a much larger customer portfolio. I mean, if you look at the big fives, for example,
Hmm.
they have a customer base anywhere from 8 million, 7, 8 million customers plus. Foreign
Yeah,
banks didn't have that sort of portfolio of
yeah, of
customers.
course.
And mid-sized banks also today have 5, 4, 5, 6 million customers. So this era of thereafter, this era of expansion of local banks has kind of provided that access, I would say, has set up the access to retail customers, to individual customers, to small businesses. So that definitely has happened. There's an interesting question here, Faisal, that
Okay.
says, is branch banking becoming obsolete given extensive bank applications and their usability?
Mhm.
I think if you look at the more developed markets of the West, there are, Abhi, recently we hear about digital retail banking license being given. That's something new, and everyone's waiting for it. And seeing what will happen once these digital retail banking. These are going to be banks without a branch network, essentially. So, will this make branches obsolete? No, I don't think so, because you see evidence. So I'm evidence based. So you see evidence of digital banks in more developed societies, economies, with other banks with branch networks very healthy and existing and growing. So I personally think, however, that um, today's environment, what the digital solution does in terms of adding value to the customer's experience is, one, whenever a customer buys a new product, um, that entire digital experience can be very quick, fast, easy, and the customer doesn't really have to wait. पहले एक ज़माने में you had to wait for 3 days for your account to be opened. Now you can open an account right there and then through through digital solution. Number two is that today you used to go to the bank to either get cash that was then or get a pay order made to make payments to some someone else. Um, Today a lot of those transactions that you did going to the branch were then slowly and gradually taken over by the ATM, then the call center, and today it's the digital application. So I mean, you and I and everyone else, we do our transactions through the digital through digital means, and we really don't want to go to the bank to do it. If we can avoid it, we will definitely avoid it. So 90% of the times we are engaging
Yeah.
customers are engaging for transactional solutions
Yeah.
through digital means. However, digital has yet not really been able to provide, at least हमारी market में तो it's still we're still providing onboarding solutions and post onboarding transactional convenience. Uh, the question is, has digital through digital means, have we been able to sell, onboard, understand our customers, understand their needs? Okay, there is AI and there is there are robots and you and I have and all of us have experienced talking to a robot, but there's only so much a robot can do, right?
Yeah.
Eventually, uh, from a business perspective, you got to realize that in retail banking, and we're talking about retail banking here, any bank's portfolio will have a Pareto. So, 20% of the customers, ideally speaking, will have pockets big enough to provide for 80+% of the business and the revenues of the bank in retail banking. Now, those 20% customers need to be solicited, need to be relationship built, need to have somebody listen to what their needs are, actually proactively engage with them, get to know them, and provide solutions to their needs, and be the person in the bank that they can call for their financial problems. That is that is the biggest gap today as the industry has evolved, and we've seen all of these good things happen in terms of network and digital solutions, etc., all of these being provided. But is it converting into that, at least even the top 20%? So I mean, if you're talking about if you're talking about a large bank of 10 million customers, you're talking about 2 million customers in that large bank. Are they being engaged? Are they being solicited? Are they being relationship built? I don't think right now digital solutions have gone to the extent, and we're far away from there, of actually presenting to the customer an avenue where they say, okay, I'll go to this portal and engage with it, and it'll give me a solution to my needs. It'll be able to understand what my portfolio looks like and maybe provide me a solution for what I'm looking at now. Still, yeah, you still need that relationship orientation, and I think that's the we just discussed, Faisal, maybe portfolios, and I explained a little bit about what I think portfolios look like in a bank, but that's the people's issue. So the other issue that we have is, we will obviously talk about the three P's: the portfolio, the people, and the process. But this is then comes the people's issue. There is a portfolio issue in terms of all these customers not being engaged, but they're not being engaged because there is definitely a people's issue. Um, and we can talk more about that if you want.
So, yeah, I mean, while digital banking is, I would say, making reasonable strides in Pakistan, and we know that State Bank of Pakistan, as we speak, is considering, you know, application from, I think, at least five parties, if not more,
Ji.
for approval of their licenses as digital bank. Uh, but what do you think? I mean, could be the critical success factors of digital banking? I mean, it is sometimes criticized that, okay, in Pakistan, since we have a very, unfortunately, a very low literacy rate in terms of general literacy as well as financial literacy, so digital banking will not be able to flourish as much as it has in the advanced world. So that's one of the critiques that is given to the digital bank. So, what do you think about it? And secondly, I mean, you talk very rightly about the relationship orientation, understanding of the customer's need based on the customer's behavior patterns, etc. But then that brings us to the issue of data, also data quality, and as you know that if you have garbage in your data, then what you get out of it is also garbage in, garbage out. That's an old adage. So what in your opinion is going to be the scenario for digital banking given these two factors I have just mentioned, and what could be the critical success factors?
Okay, so let's just take the first one, and then we'll come to the second one. And then the second one actually is intertwined with the first as well. But today, if we look at digital digital solutions, and these various organizations that are trying to and since we're talking about retail banking, that are applying for digital retail banking licenses. You have different sorts of companies. You have telcos, you have large banks, you have just foreign investors wanting to come in and play that part. um, um, so the if, when you actually think about and talk to these companies, in my view, they have a different approach to what segments they want to target. So for example, a bank would naturally look at getting into retail digital banking, with knowing the regulatory environment that they're getting into. They understand the risks, right? Um, but what I feel that most of the players do, including the telcos, is that they start thinking of digital retail banks as a provider of services for the unbanked, or the not underbanked, the unbanked. So
Unbanked.
essentially, you're going to the lower end of the segment and saying, okay, you know, uh, this is the area that we need to go and provide digital solutions to, get them in and open their accounts and give them access to a bank, which is great. I think that you can actually go down and do that business, and hit that kind of micro banking space with digital solutions, and bring that customer in. Um, my view is that, have banks actually thought about offering or looking at their own portfolios, and looking at the digital solutions that they offer today in their own portfolio? So we have today a capitalized micro banking industry of about 8 to 9 million customers. However, if I look at uh, the middle class in this, in our economy, you're exceeding 50, 60, 70 million customers, potential customers in our in Pakistan who can have an account of 100,000 rupee plus in a bank. Has anyone actually ever thought about, okay, if we're going to come into digital banking, how many of these 100,000, how many of these 40, 50, 60 million customers, most of those customers actually have been capitalized. How many of them can I provide, because through digital banking, I'm providing easy access to my products. How many of them can I actually target and provide my products, my lending products, my transactional products, my savings products to these customers? Because per customer, that offers me a fairly large volume of business compared to, say, the micro industry that is a huge number of customers, but per customer, it offers me a fairly small volume. So I would encourage, number one, now there comes the data. So one was approach. So as far as I'm concerned, you need to look at the industry and segment your approach. Just because you're going digital doesn't mean you need to go underbanked or unbanked.
Right.
You should actually think of, okay, what has been banked, and how can I provide digital solutions to the banked, or what we call retail and mass affluent. But retail is a big space there. So how can I provide solutions to this retail segment and grow my share of wallet from these customers? And then, okay, now let's go down to the mass retail, or micro, if I may, micro. And what is the business case for micro, right? Because it's very exciting to hear, okay, we've now got X million customers that we've brought on board. But are those X million customers, um, is there a business case to be made on those X million customers, right? um, and why am I saying that, Faisal? And why am I kind of talking about this? Because a lot of people today are talking about, you know millions of customers that you can provide access to. But when you look at banks, the 80% of the customers, which in a large bank is maybe 8 million, so you take the big fives, you'll talk about 40 million customers, and maybe, if take the overlap away, you're talking about 25 odd million customers. These 25 million customers sitting in these banks that are the lower end of the Pareto, if you look at the business case for these 20 million customers, you'll probably find that the bank makes a loss running that portfolio, right? And they make money running the top end of the portfolio, which is the 20%. So today what I'm saying is, you know, uh, have you ever thought about going to this entire portfolio with the digital solution that you're talking about, and penetrating them with products and services, and making a business case for that, rather than going further down and saying, okay, let me go to millions and millions of other customers who are underbanked? Or what is the business case for it, is my question. Somebody has actually asked, what is your take on Sada Pay and Naya Pay, and more contemporary modes coming into the market? I think Sada Pay and Naya Pay, I mean, these are quite successful. I mean, I hear about Sadape actually having, they've got 100,000 customers, with another 300,000 customers in waiting to open accounts, because it's a very easy, quick way to open, to open an account, and then be provided services from these accounts. I mean, this is the challenge to the conventional banking industry, because आज आप बैंक जाएं अकाउंट खुलवाने, तो वही बैंक जो है वो आपको कहता है कि भाई 3 दिन लगेंगे, हम अकाउंट तो खोल देंगे, आप नंबर भी दे देंगे, बट उसको ऑपरेट करने में आपको एक्स नंबर ऑफ डेज लगेंगे. बट these channels will actually are challenging the the customer. But to me, this entire offering will be a real challenge actually to the commercial banks, when we see product penetration per customer grow, right? So when we pick up a Sada Pay or a Naya Pay portfolio and we say, okay, guys, where are you making money? Now this is purely from a internal business perspective. Which portfolio makes money here, and which portfolio just gives you a number of accounts, but not as much revenue, but more costs, for example. Um, that they will then start making you think a little differently. Yeah? You'll start thinking about, okay, great, we have a 400 500,000 accounts right away, but are these customers using our products and services? And the upside is that actually solutions like these can provide those products and services very conveniently to customers. So it's the transactional solution, the onboarding ease, the hassle-free onboarding and transactional solution that's probably the upside that these solutions have. But it's we wait to see what is the product penetration that they can generate into their customer base, that eventually builds a business case for them.
Yeah.
Can they have 4 to 5 products per customer actively being used? Will they be able to target that customer with that sort of wallet? I mean, that's the business case that needs to be looked at from my perspective, at least. Um,
Yeah.
okay, so here is another one. UBL introduced a product, unbanked sector, Wiz cards. Not sure if that was ever a success. Access to this product was, however, very rigid. Okay, um, if the access is rigid, then obviously in today's day and age, people will move away very quickly, because they people are becoming used to uh, you know opening accounts very 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 easily, but also at the same time, and more importantly, accessing their account very easily. I can't say any more about that, but so yes, okay. Amir Sharif is an old friend of ours, Faisal. I think you remember Amir. So he says,
Right.
Salman, your thoughts on need market segmentation and solution to meet the unbanked. Are there tech savvy? Do we have the caliber to serve these people in baby steps? As we know, Gen Z and every millennial is more tech savvy, so we are meeting the demands and understanding our customers. Amir, since this is a webinar more on retail, let me just talk about that. Uh, Meeting the needs of the retail segment today is a challenge. Like I said, like we talked about earlier. Um, if you, like I said, you look at any bank's portfolio, and you'll find product penetration to be very low, whereas the products in the banks are, like I said, 15 16 products that they sell to the retail customer base, but the product penetration is very low. If you ask any customer, generally speaking, if you ask them, where did you get your credit card, where do you have your debit card from, do you have an auto loan, yes, do you have a savings product, yes, and you ask them, how many banks is this spread over, they'll say, maybe 4 or 5 banks. So what does this mean? This really means that banks aren't focusing on relationship building and getting your share of wallet. But this also means that a lot of customers out there don't even know that their needs can be met through financial solutions and products that the banks have to offer. This is the bigger opportunity in retail banking, if I may. And I think that's what banks need to look at. And which brings us, really, we spoke about portfolios, we've spoken about. Let me just add a little bit more on people very quickly, Faisal. I think the development of people is another big issue,
Right.
because banks have grown and they've all gone towards retail banking and primarily towards the deposit side, to start with, and I think they need to move away from that. Not to say that they need to leave that, but they need to get into other products and services. But because people have moved away, they've left this big opportunity that they can access. So um, yeah, so people development has been a big issue because of this expansion, and I find that there are, you know, even if in the branch banking distribution, if I look at, um, you still find there's a huge potential to grow business acumen amongst people who are managing distribution, um, um, people who are managing branches, RMs, basically um, building their skill base around how to do their business, how to manage customers, how to manage business, how to manage branches, and a branch banking portfolio, and how to even look at it. That I think with this growth, that entire piece has kind of been grossly neglected as well. So I think that's another big opportunity that needs to be looked at. Sorry, Faisal,
No,
I
no,
can
it's
go.
okay. I mean, it's obviously a very interesting observation. I mean, you've given about people, and people, as we know, are at the heart of any business, any organization. So, I mean, you can have the best of technology, best of policies, best of processes,
Yeah,
but if you don't have the right people for the right jobs, then I think you're done. So, of course, we'll be talking a lot more about people. I think in one of our subsequent episodes, when we talk in detail about the three P's, or the three pillars of retail banking. But
yeah.
let me, segue into something that you've already touched upon, or some of the members of the audience have also touched upon. They've talked about tech savviness, and and you've also talked about the ease of relationship with a customer, how these accounts are set up, etc., and how their needs, transactional needs, are met. So, I mean, that takes us to the question of fintechs. I mean, do you think that fintechs and banks, obviously, I mean, they are different in their sizes, and they're different in their structures. So, is there any synergy between them? Often the answer given is yes. I mean, there is synergy between them, but we don't see much of that synergy. Yes, we have seen some deals or MOUs being signed between some of the fintechs and the big banks as well. But I mean, do you think that in the years to come, these banks will gobble up some of these fintechs? Um, so what do you think about that?
I,
What are
I,
your
I think,
views?
Faisal, I'll give
I
you
may,
a
if I may just
sorry.
also mention
My,
this,
my, my
that
apologies. My apologies.
no, no, it's okay. I mean, banking as a service, BaaS, that is something which is being offered by fintechs, right? So
Yes.
there was somebody from the audience, you know, Sana, I think she had asked that, is there going to be any future for the brick and mortar branches if the banking, not only in future but a large part of banking that is being done today in the present is going to be based on apps. So just to extrapolate from that point that she raised, I mean, are we going to see the banks as they exist today, or as sometimes, as also very vociferously pointed out by Nadeem and Saab, that banks are going to be a thing of the past, something like that. He has been saying on various forums. I mean, if they don't get their act together, they will be then history. So, what are your views about these three areas?
So, Faisal, I think सबसे पहले तो let's talk about fintechs very quickly. Um, you know, I look at, again, from a retail banking platform. I look at fintech as a solution for my customers, right? So they provide what they, a financial technology company that comes in, provides digital solutions, transactional solutions. So if I go to a small business, I'll tell them, okay, here is my solution. You have 10, 15 people. You can do payroll through this. You can make payments to your suppliers. You can make payments, receive payments from customers, etc., etc. This is a digital solution, and you can do your accounting, look at various other facilities and services provided in this solution. Now, the issue is that generally the way banks have approach the market has been very inward looking. If you look at most banks, what they will tell their um, business development teams to do is I want growth in deposits. I want growth in current account. I want, when they want growth in credit cards, and I want growth in credit cards. So auto loans. What they're not, what they need to translate that into, and therefore, when they're provided with a product like this, they're not saying to their distribution points, I want transactional solutions sold to small businesses, right? So, and I want this digital transactional solution. I want you to go out there, find out the need for digital transactional solutions. How many small businesses do you have? How many small businesses with X number of employees? We can actually give them this solution or present them with this solution, right? This is not the talk that is happening inside of banks, right? Inside of banks, what they're saying is, love, I want current account, right? So when the guy goes out to solicit for business, they say, oh, please, can I open your account, and can you please give me current account? Well, the discussion doesn't go around providing a solution to a small business for all these things through which a current account will actually come in, and a more sustainable current account will come in. So if when Nadeem Hussain says, rightly so, if banks don't get their act together, in my view, the first act that you need to get together is that you have digital solutions. Are you actually presenting digital solutions to the right customers as problem solvers, right? You're not doing that. You're actually going there and saying, please deposit de dein, or deposit ko nikaliega nahi, or deposit bas rakhe rakhe hamare paas, right? So when a fintech company, however, realizes that, hey, listen, these guys don't do it, I'll have to go myself to all these people and sell them my solution. So when they go to these same customers and sell them the solution, it makes sense to the customer. Yes, I want this solution. It makes sense to me. I'll be able to do everything. So because banks don't do it, whilst they have the product, they're just not, I would say that the communication is not passed on in that manner. It's not KPI'd, if I may, in that manner. Therefore, they're not able to sell, whilst they have the largest network to actually do these sorts of things. So I think if banks don't do it, fintechs will start taking that space. And yes, eventually banks have larger capitals. They will see that these guys have done things that they haven't done it, and they haven't done, and they will buy them out, or gobble them up. But
Like
they will
Pac-Man.
continue, yeah, yeah, but they will continue to offer those solutions through these companies who are obviously more savvy and nimble on their feet, and understand their customers more. And I think actually small business solutions are also being provided today through certain fintechs as well.
Yeah.
You find those solutions being offered to distributors of Daraz and Food Panda, etc. Loans being given to those people. Fintechs offering advanced salary solutions to their customers, employees, etc. So I mean, these are things that large banks, unfortunately, um, aren't able to do. They can do it if they're more retail oriented. So it comes back to, are they more retail oriented? No, and therefore they're losing that market under them to these players. Are these players big enough to kind of challenge them going forward? Yet to be seen. Mostly, what we've seen in other markets is that these players, like we just mentioned, get gobbled up by the large banks, and they and then they kind of provide solutions to
Yeah.
these players. You
Salman,
have
yeah, please go
the
ahead.
question that you had, Faisal.
So, sorry, uh, the next question is actually on my list is a bit different from the Pakistani market. Since you have worked in Indonesia as well as the group head of their retail banking, and I'm sure that There could be certain takeaways from Indonesia that can be perhaps applied to the Pakistani market and vice versa as well. So, could you just maybe briefly sort of
Yeah.
say a bit about your experience in Indonesia?
So very, very simply put, purely from again from a retail banking perspective, uh, Pakistan has always been a market with high interest rates. So the focus, unfortunately, the focus in Pakistan for retail banks has been deposits, and the revenue driver has been deposits. But if you look all over, all around us, you look at the UAE, look at India, look at other parts of South Asia, but then go to the Far East, where I worked in Indonesia, the interest rate regime is low interest rates. So one, they actually do banking, retail banking, which means that they make money. Deposits are only brought in to fund the balance sheet,
Hmm.
right? But the real money makers are, are saving solutions, are solutions, borrowing solutions, protection solutions. So all the way from various loan products to funds to insurance products, etc. These become, and transactional solutions for businesses, fee income generation. So your drivers, Pakistan, in Pakistan, your driver of a retail bank business, 80%, or not 80%, 70 to 80% is interest income or profit in Sharia compliant banks. The bulk of that interest or profit comes from deposits, not loans, and fee income is 20 to 25%, right? However, when the moment you go to markets with lower interest rate regimes, you find that revenue drivers over there are very different. The revenue driver of interest or profit is loans, right? And fee becomes a very big part of the revenue in those environments. So fee from selling funds, and fee from selling all other sorts of transactional solutions, other products, etc. So when I was in Indonesia, it was refreshing actually to be able to work with other products and other services, and to be able to provide those products and services and drive the organization, on other products and services. And deposits were not you know uh, focus, or central focus, uh, the central focus of the entire business strategy. It was all these other products and services. So you became a little bit more customer centric because of that. I think for us, because we are just driving this through deposits, the retail business through deposits, somehow we've lost the customer centricity in all of this. There are, obviously we can talk much more about that, but that's the difference between the two spaces that we worked in.
Mhm. Well, actually, we have already hit the 1 hour
Yes, we
mark,
have.
but still, there's a lot to be asked, and then there's a lot to be said,
Yes.
and we will cover, some of the left out topics in our next episode. But still, I would like to say here that obviously retail banking in Pakistan, it needs a reset or a reboot. And as you mentioned early on, that retail banking is, it rests on three pillars: people, processes, and the portfolio. Um, so, at this point of time, I would just like you to give a very, very brief overview of what you mean by these three P's. I mean, obviously they're self-explanatory, but what are you going to be talking about in your next,
So
episode?
very very
Please.
high level, Faisal. What we'll talk about is uh, obviously the it will be under the umbrella of retail bank reset. I think that's very well kind of coined that phrase. But um, we will be talking about, okay, how do we reset, or how do we propose a reset for retail banking businesses in Pakistan, um, and that we need to look at through looking at retail bank portfolios. And we've been fortunate enough that, over a period of time, we've worked with various banks, and we've seen portfolios across various banks, across various branches. And we feel that, when you look at those portfolios, you see a huge opportunity of where business can be built within existing portfolios, as well as within their branch trade areas of various branches and banks. So uh, we'll look at those portfolios, and we'll talk about, okay, what are the opportunities, where are the issues, where is the big play here that banks need to look at, and we'll talk about that. Very interesting, actually, that we have some really good insight to share, and I'd like our audience to join in on that. Then comes people, actually. If you want to address this, the opportunity in the retail business, you need to have people with the right skill set. So where how what is the skill set today of the people, but what is the requirement from them? So what should be the requirement, essentially, from the people at various stages of retail banking business, when they manage, be it credit risk, be it loan businesses, be it branch banking. What's the skill set required for business managers, and then for distribution points, RMs, etc. What do you need, and why do you need these skill sets? So we'll be discussing people in detail, even structuring, organizational structures
Structure. Yeah.
of banks in the retail business. So we'll talk about thoughts around there, what we have seen, and what and what the opportunities are in terms of upgrading people. I think it's a
Yeah.
huge opportunity.
And what
Huge
could be the
opportunity.
best practices as well? So, yeah, I mean, that's,
Exactly. And I think it's a very exciting space.
yeah, I mean, very
Retail
exciting.
banking business has grown, but unfortunately, we don't have youth coming towards, a lot of people coming towards retail banking business and want to make a career out of it. But I think it's a huge space. It can grow in multiple. So great opportunity for people. But we need to also address first, how can we reset, this people's pillar, so that people are attracted towards coming in and into retail banks, but also getting the right skill set for it and growing within the organization. Pakistan is all about retail. Come on, we are 220 million plus
Yeah,
uh, people. Um, the third is processes, obviously. How do we get these products and services across to people? What sort of SLAs, KPIs, etc. do we need to form? How do we run this organization, digital space, as well as the physical space? What's the reset required there? I mean, we have all these products and services showing up, but how do we look at them in terms of customer uptake, in terms of, again, in terms of product penetration, these services. And what do we need to do internally to be able to make it more seamless for the customer? Because, like you rightly said, fintechs, digital DRBs coming up. Today, the Sada Pays and Naya Pays of the world, these are all challenging banks, telcos, you know, offering offering these services. But I think the banks have their own space and they have their own opportunity, and that opportunity is within the banks. It's within their portfolios. So they need to fix their processes, and they need to fix the way they develop their people. That reset, I think, can help them grow in multiples, because the opportunity is sitting right there and then. And we have empirical evidence for this, Faisal.
absolutely.
Um, we've seen this. I mean, with Sharia compliant banks, we've seen them grow in multiples. We've seen banks with networks of 75, 80 branches grow, double their bottom line in the last 4 to 5 years. 4 to 5 years. We've seen
Yeah.
that happen. So I mean, that opportunity is very much available in our marketplace.
Yeah.
It's just about how we are going to look at them and what's the reset that is required. We've got our friend Zafar Mirza, who's just commented. Well, long comment he's got, uh, but
Oh,
but
shall I
dear friend,
read
Pakistani
it?
banking.
Okay.
Yes, please read it, Faisal.
Yeah, okay. Pakistani banking for the past many decades has been offering vanilla products, retail being a funding arm primarily, and touching few segments here and there for lending and trade. Consumer financing with low penetration. In my view, digital banking can't take over this type of banking even in the next 10 years. Wow. The benefit would be customers' stickiness in a fierce competition of getting more deposits. We need to strategize for the whole new banking solution like you are discussing here.
Absolutely, music to our ears, right? This is exactly what we've been talking about.
Yeah.
So, yep, I completely agree. Even though I want us to change our language from, from deposit taking. I think even deposit taking will continue to happen. I would encourage for us to say, business development, revenue development, customer stickiness, product penetration, customer
True.
loyalty. These are the sort of things that we need to focus on. These should be the KPIs. Deposits is an after effect of doing all of this, and sales of other products as well. So I completely agree with all the comments that Zafar has to make. There's another comment. Uh, Says how to fix the condition of microfinance bank in today's era. They charge so much
Oh,
markup, but still heading towards disaster. How to stop it? Okay, interesting question. Um, Microfinance banks actually over the last 4 to 5 years have done quite well, by the way, in penetrating the micro industry. And I think if you look at their pricing is always risk based. So they're not doing nano loans, so it's not the exorbitant pricing that we're talking about. They're risk based pricing, and they're they're also assisting the customers that they bring in with solutions relevant to their businesses. So I think micro banks are playing a much bigger role. And if you just start looking at their pricing is risk based, and they have to be sustainable as well. So they're learning as they grow. And that space, in my view, if you ask me, if you look at the number of credit cards in the last in the retail bank space, here we go. So if you look at credit cards in the last maybe even 20 years, 10, 10, 15, 20 years, we used to hear 1.5 million credit cards. We still hear 1.5, 1.7 million credit cards. But if you look at micro loans, they were 2 million 4 5 years ago, and now they're 8.5 million. And they're running sustainable portfolios. So customers are paying back, customers are taking more loans, customers are growing their businesses. I think I'd say it's a rather sweeping statement. Um, the markup charged is risk based, and as I feel as the market grows in their understanding of micro portfolios, then the pricing will also start to become more risk based, more segment focused, more performance focused for customers. So bear with it a little while, but I think they have done a good job
so
in getting to the
is,
segments that they have. Yes.
is there, higher markup also a function of their high cost of funds as well? Does cost of funds?
Yes, partly, Faisal. Yes, MFIs definitely, but
Yeah.
MFBs have started to move, into taking deposits from the market. So their cost of funds has slightly improved, and their sustainability also obviously is improving over a period of time. However, that is a challenge. So it's a very good point, Faisal, that a MFI was used to having funds available to them at a fairly high rate. Then they came in and became an MFB. So the funds were substituted by deposits, high cost deposits, and now they're starting to understand that they can actually also get the transactional flow of the, not necessarily their customers, because that's a very small percentage of their deposits or funding, but of the customers that are around in their branch trade areas. Probably not given as much importance small businesses as they would give them more importance than maybe commercial banks who are always looking for the large customer, right? So they're starting to understand that, and as they get into that market space and get transactional deposits in, which will be low cost current and savings, their cost of funds will drop, and then
Yeah.
hopefully that translates, along with a better credit understanding of their portfolios, that translates into a better pricing for them. For
Yeah.
But to, you have to give them credit for going into that market and capitalizing it and growing their customer base.
Mhm. Okay, Zafar Mirza has got another
Now,
question.
so Zafar, I think Zafar has responded to MFIs. Zafar, individual deposits, if I may, to Zafar's question, MFBs are allowed to
These
get into.
can accept. Yeah.
Yes, yes. MFIs aren't, obviously.
Absolutely.
Okay.
Well, Salman, if there aren't any other questions from the audience, I think let's move towards the conclusion of this session.
Yes.
I would like to, apologize to the audience for the absence of Hafsa Abbasi. She was going to join us, but unfortunately, she had a death in the family. So that's why she was not able to join. But I think in the future uh, episodes, she will be joining us.
Yes.
So I would like to take this opportunity to thank Green Peak International, particularly Salman Butt and the GPI team there as well, Hassan Tariq particularly, for organizing this session, which hopefully was quite useful for the audience. Inshallah, we'll be having two or three rather more episodes on the same topic, which is retail banking opportunities in Pakistan, and particularly with the focus on the reset of retail banking. So, Salman, if you would like to say
Yeah.
anything or add
Just,
anything to this,
just want to reiterate what you said. First of all, I'd just like to thank the audience for being with us and asking the questions that they have added a lot of value to our discussion. Today we discussed, retail banks, how retail banks have, the business has evolved. We haven't been able to cover everything. There's paucity of time, so there's so much to discuss, but not everything could be covered. Hopefully, we've been able to talk about things that could add value to the audience. But now the next three episodes are going to be called the Retail Bank Reset, and this is what GPI Talk is going to, is in these three episodes. GPI Talk will analyze what is the retail bank reset in people's portfolio and process. So these are the three episodes. One will cover people, one will cover portfolio, and the other will cover process under the umbrella of retail bank reset. So do join us.
yeah,
It'll be an interesting conversation, and yeah, we hope to talk about these exciting, hopefully exciting changes happening in the market and what can be done for the retail banking industry.
right. Okay, and with that, Salman, I would like to beg leave the audience. And for those of you in Pakistan, a very good night to all of you. If you are from outside Pakistan, good afternoon, good evening, or whatever. So, all the best. Thank you very much, and Khuda Hafiz.